What's up everybody, welcome back, and if it's your first time here, I hope you stick around. Hopefully you can learn some of these life-changing skills and apply what is taught here to your own charts. So what we're going to do today is we're going to go through the markets, see what the price action is telling us, see what the key levels are, and if there's any bullish or bearish edge on these charts. I posted a lot today in the Discord. Hopefully you're able to catch some of it, and we're going to go through some individual equities as well. So let's start off with the indexes and let's get into it. So on Tuesday, the S&P finished up 1.36%, the Nasdaq finished up 1.36%, the Russell finished up 1.16%, and Dow, having that energy continue its tear up, finished up 1.18%. So looking at the S&P today, you actually had a really strong day where you rallied into the close and finished at the highs of the day. This bearish divergence that we were talking about from one high to the next actually hadn't begun to play out, and what you started to do was build positive momentum once again, and you actually just entered the bullish control zone on your RSI. So it does look like you do want to head to this pattern completion zone of the 886 from this previous swing high to low, also this support from May 2021, and you have this supply line that also is confluent with the 200 simple moving average on the daily. So this is definitely a nice zone where traders would probably take profits. Let's get here first. If we can maintain and hold this level, you're going to be going up to the next level at 42.36. Let's just take it level by level. And just even looking at the 4 hour, you are back above the 200 simple moving average. Bar over bar, you are having higher highs. You are also losing negative momentum on your MACD and about to go positive. You're also in the bullish control zone on the 4 hour. So it's looking like 40.58 is very reasonable at this time. So looking at the Dow Jones today, you actually had a breakout day where you've consolidated in this inflection zone since the 10th of November, and you finally broke out today. But it's not always about the breakout, it's about the follow through. So we're looking for follow through tomorrow. You did have this hint of bearish divergence on your MACD where you would assume to build negative momentum. You actually started to build positive momentum once again. You are still in the bullish control zone on your RSI, slightly overbought, but can be overbought for a while. Let's get back above these highs from August and make our way up to the next level of inflection if you can stay above these levels long enough. Straight up, straight down, straight up, straight down, straight up, straight down. So that's what we're looking for above this level. Will we get follow through? It's possible. All right, so looking at the Russell and daily, you haven't quite done what you needed to do yet, like the Dow is doing. So you'll see the supply line here dating back from November 21. You haven't actually broken out yet. You did bump up against it back on the 15th of November, and you are making higher highs, higher lows locally, but you still are under the 200 simple moving average, and you hadn't broken out of the supply. You did have this bearish divergence on your MACD and your RSI. It doesn't seem to be ushering any downside or negative momentum as of yet. Let's look for this to do as the other indexes are doing and start to build positive momentum once again and enter the bullish control zone on your RSI. Once you do, hopefully we can get back out of this supply and head towards target 2 from the original breakout back from October. So looking at the Nasdaq on the daily, you are about to bump up against the supply line here from the downsloping parallel channel. You do have this bearish divergence, which is class C bearish divergence from one high, higher high, and the same levels of momentum being the same highs. It's a weaker form of bearish divergence, but nonetheless it is bearish divergence. Let's see if we can start to build positive momentum once again and get back into the bullish control zone and get a breakout from this supply. Once you do, you'd be heading towards the top of this inflection, which would be 11,915. That's what we're looking for. That's what we're waiting for. All right, so taking a look at the dollar on the daily, it does look like you actually are bearishly back testing, which was once support from August and September, to where you were unable to break above it with follow through. You had this one initial candle close back above this level, and the follow through was immediately rejection afterwards. So what we're looking for is more follow through to the downside, which will probably bring you down to about the measured move of this 3 falling peaks pattern down to 104.84, which would be great for index funds and equities. So taking a look at the VIX on the daily, you're definitely on your way to the pattern completion zone of this 886 bat, to where you have your gap fill at the level of 2064 and your pattern completion zone at the 886 from your previous swing low to high. You may find limit bids in this zone here, but I wouldn't be taking a shot at the VIX until we got down to these levels. And let's see what happens at these levels. Let's see if we shoot through it and continue to break down, or if bids are here and we do see buyers step in and push the price back up and hold this level. So looking at USOIL on the daily, we did have this bearish divergence on your MACD and your RSI actually play out significantly to the downside. But what you're finding is you do have limit bids and buyers are defending these levels here. And I think it becomes a little more clear on the 4-hour, because this is the pattern completion zone of a deep crab, where you are having your reaction. You've rallied some. I do think this would usher you into test or bearishly back test 8305. You haven't quite done that yet, and you just bearishly engulfed on the 4-hour. Let's look for follow through, which is more important than the actual candle itself. Follow through to the downside. So if this was just a reaction off the level, great. Maybe it's not a reversal. We'll have to see. Let's see if we can get a back test of 78.35, which could be a great potentially shot to go long again. But also what I'm seeing on your 4-hour is possible, maybe too early to tell, but it looks like you could be working on some bearish divergence from your one high to your lower high with higher levels of positive momentum. So let's see what the next few days bring, but keep in mind it's a short trading week, a lot of people aren't around, and you're gonna have these volatile swings. But let's see if this ushers in any follow through to the downside, where you get this maturing of your bearish divergence. Taking a look at gold on the daily, so we did notice that you did have a reaction at the 886. We were talking about how this was a premium area for shorts, the 886 and the 786, and you'll see here you came up and tested the 886 once, twice, reacted, found support at the 618, but you are now bearishly backtesting 1747, which was previously support, is now resistance. And it becomes a little more clear on the 4-hour as well. Where I was pointing this out in the Discord today is when you're rejected here, major sell-off. Bearishly backtest with follow through and follow through continuing. I do think you take out these levels here at 1735. You're headed back down to where this previous consolidation level was, around 1700. So let's see if there's any more follow through to the downside over the next couple days. Taking a look at silver on the daily, so it seems you were unable to break the supply line here, which was also a 886 from your previous swing high to low. So you are reacting at the 886, the supply line, and being rejected at the 200 simple moving average, where you're building negative momentum once again. And let's see if you can get, yep, you're out of the bullish control zone. Let's see if you're rejected at 60 once again and head back down to neutral, because you're currently at a overbought condition when you're at the top of the range here and you're butting up against the supply line. Let's look for more follow through to the downside. As you can see here, you weren't able to break out. You bearishly backtested with follow through, and now you're just kind of consolidating around this level here. The 4-hour on silver, if you're going from this one histogram island here, you see there is one peak. So you have your high, your lower high with higher levels of positive momentum. This is creating this bearish divergence from one high to your lower high and higher levels of momentum. So no matter how hard buyers were trying, just could not push prices back up to these levels. where we did have this argument for accumulation. Let's see if we can get a pullback down to 19,846, which could possibly be even a great entry to go long. Taking a look at copper, we do have this copper in this bear flag pattern. We did have a reaction off this bullish Gartley, where you had your type 1 reaction, reverse, found support, and your type 2, which ushered you back into your supports. And you did find resistance at your 200 simple moving average. You did find resistance at which was support previously and at the top of your bear flag. And what you did today was you bearishly backtested the heart line of this parallel channel. Let's see if we can get follow through back down to the downside. Negative momentum is building and you are in neutral on your RSI. Something interesting that happened this week I also wanted to bring to your attention is TLT. So TLT is actually now having a candle close back above 101.48. And every time you've been in this range, it's been straight up, straight down, straight up, straight down, straight up, straight down. Why not straight up again? I do think you want to wait for some follow through after this candle close. So let's wait for the week to close back above these levels, and you could even marginally have a stop loss below 101.16, just with this bullish divergence from your one low to your lower low, one low, higher low on negative momentum. And you guys can see as your RSI is approaching neutral, you are seeing your first positive momentum on the weekly. Very good signs for reversal on TLT. Let's see if there is any follow through with this bullish divergence and back within this range. So just bringing up TLT on the daily, it's like we talked about before, it's not about the candle close or individual candle itself, it's about the follow through. You see we did this already on November 16th, and what happened immediately after? Gap down and follow through to the downside. Now we're back above this level, buyers are defending this area and pushing prices back above 101.16. Positive momentum building, approaching the bullish control zone on your RSI. So yes, we have broken back in it, but let's get some follow through from this candle to be a little more bullish on this asset. Taking a look at Apple now on the daily, you almost bullishly engulfed. The problem is you gapped up slightly and had large swings throughout the day, so it's not a true bullishly engulfing candle, but you did get a higher candle close in the opening of yesterday. Your RSI is headed towards the bullish control zone. The only issue I have with it, this is on decreased volume, which we've been talking about. People are on vacation, you have a lot of seasonality where you have tax loss harvesting, people are out of town, not many traders are trading, so it's a very illiquid market right now, and it won't take much to move these assets around. So that's why you'll see this decreased volume. So let's look for some follow through on this bullishly engulfing candle. See if we can break back above the level of 151.93, and we'll go from there. So I really wanted to bring up BTU, Peabody Energy. So we did have this really nice right angle descending triangle where you've actually broken out now. You've back tested it as support and begun to rally. So you've sprung, back test the spring, and now are rallying. You are in the bullish control zone on your RSI, and where you thought negative momentum would begin to build, you're actually seeing positive momentum build once again. Good stuff on energy. You really just can't stop energy. Don't fight the trend. So what we're looking for here now is a retest of the all-time high candle close around 32.63. All right, so another asset I really wanted to bring to your attention was PGR, Progressive Insurance. Just looking at this beautiful uptrend, you are now approaching the all-time highs once again, where these levels you have failed to break out on November 10th, you failed to break out on November 11th, and you failed to break out on today, November 22nd. You do have this hidden bullish divergence, which you're building positive momentum on. You are in the bullish control zone on your RSI, but you just have a hard sell wall in this level of inflection here, to where if you do get above 130.33, you would be in price discovery, approaching new all-time highs. So very interesting level to where prices have reversed here previously at these levels. Are we going to do it again? It's possible, but you have this bullish variables on your oscillators. You've broken the beautiful parallel channel that's just an uptrend. So we'll have to see if we can get back above this with a candle close and follow through. As of now, you just can't do it. Look for follow through, and if you don't get follow through once again, it could be a really good entry for a short with a stop loss marginally above 130.33. Taking a look at Tesla on the daily, so you have found some limit bids come in at this area. It really has never acted as support ever in its history. It's only acted as resistance. So we'll have to see if we can follow through with this one indecision candle, see if we get any upside follow through. It did have decent volume, and it seems traders are taking shots at this level, but it's very weak in my opinion. I do think your major support and next levels around 110.85. Spend enough time below 181.78. Straight up, straight down. That's the situation in between. Very thin order book. You do have a little bit of chop here from 2020s, but I do think your major ones are where you found a valley and reversed, or you peaked and reversed. That's what you're looking for. Right here at this level, all you've done is reverse. You've never back tested it formally as support. Maybe you're doing that now. We'll have to see for follow through. Taking a look at PayPal on the daily. So what you're actually doing now is quite interesting. So we did find resistance at resistance and at the 200 simple moving average, but locally you're making a higher high than this high, and potentially you're putting in the same hammer candle as a higher low. Let's watch for follow through now back to the upside. Get back above 82.76. Your next stop again is 92.98. Just up and down between these ranges. But your negative momentum just begun to build. You are in the bearish control zone. So you're just kind of in the middle of a range right now, but you possibly could be putting in a Japanese reversal candle. Let's watch for follow through back to the upside. So looking at Amazon on daily, kind of the same story. You're just really in the middle of a range between straight up, straight down, straight up, straight down, straight up, straight down. Why not straight down again? You're just kind of in the middle of a range. It's nothing candle. Like, it's not a possibly a hammer, but you'd want to see it a little lower than the previous candle. But maybe that's a hammer. We'll have to see for follow through to the upside. But you still have this really nice gap here at 89.61 that hasn't filled. And you're doing all of this on lower volume. So keep that in mind. You're just in the middle of a range, no action to take. Just watch for follow through to the upside. If you do get that follow through to the upside, let's say a nice bullish engulfing candle prints tomorrow, and you could take action there with a stop marginally below this potential hammer candle. So taking a look at Google on the daily, it actually looks like you are having this potential bull flag pattern here, where here's your pole and your downsloping flag on increased volume, and you've bounced off neutral for your RSI, and you are waning on positive momentum, but this could automatically just begin to build again tomorrow with any follow through. So something to be keeping an eye on is definitely looks like you have your pole and your flag. Set your alarm if you want to play the breakout, or if you want to kind of play this inside trading candle here with having a stop below the open of today's candle. Alright, so that's all I've got for you today. Thank you so much for going across the markets with me. If there's anything you didn't see and you want to see, please leave me a message, drop a comment, send me a direct message, and I'll incorporate it into the show going forward. And if you like what you saw, please hit that like, that bell, that sub, and I'll see you next time. Thank you so much.